What a remarkable day really it has been for the markets. Who would have thought that you would see a pullback rally, and that too of a good 1%. So strong recovery amidst a hugely volatile session. That's how you would sum up the action today. And guess what? We're back above the 5,900 mark. Couldn't have been possible had it not been for the banking pack. Let's tell you what's lined up on the show. Lots to chat about. Chetan Iyer, MD and Asia Pacific economist at Morgan Stanley, Ashwini Gujral, fund manager at ashwinigujral.com, and Sajeev Dhawan, MD at JV Capital Services as well. Let's welcome on board then Chetan Iyer, MD and Asia Pacific economist at Morgan Stanley. Chetan, hi, evening. Firstly, has the RBI with its comments yesterday poured cold water on expectations of a rate cut from the market?
Well, I don't think it's that comment which alone makes that view for us, but we do think that RBI will probably skip rate cut in this meeting because CPI numbers are still pretty high, and we have lately been focusing more on CPI than WPI because we think that is one which determines the inflation expectations for the households. It is also determining the allocation of saving for the households into financials and physical savings, which is that if the real deposit rates are negative, they prefer to buy gold more than putting money into the banking system as deposits. So all in all, looking at CPI inflation, current account deficit, low deposit growth, we think that it's time to still hold on the rates before we go and make another rate cut. And in fact, if you just see what happened post last rate cut, RBI cut policy rates by 25 basis points, even CRR, and then banks went and, particularly SBI, went ahead and hiked deposit rates. So we haven't really yet achieved a stability in the financial system where we can go ahead and do more rate cuts in our views.
Oh yes, even in today's trading session, it was all about what the RBI is going to do, and of course banks. You had that expose by Cobra Post. The banking pack tumbled in trade and took it down with it, the market as well. And there we were. In fact, we dipped below the 5,800 mark as well in trade and saw a 100-point recovery coming in to finally close at that 5,900 mark. The inflation numbers, that came in higher, but it's a little split on the street. The opinion that is in terms of what we can see from the RBI come 19th of this month. Good time then to bring in Ashwini Gujral as well to chat about technicals. Ashwini, what is your sense after the hugely volatile session we've had today?
You know, while Cobra Post may have expected that banks will go down today, you know, the opposite happened, and I think that actually helped the bank Nifty in bottoming out. So it was in a downtrend, it was going down even yesterday. So today, you know, they added fuel to the fire and finally it bottomed out during the end of the day. I think it was more short covering than anything else. This market is clearly range bound between 5650 and 6100. Within that, you are getting these volatile moves. Now the next clear directional move or, you know, the trading signal will come in once this volatility dies out, and then you get a sustainable trend out. Because these sort of volatile moves on a daily basis will not lead you anywhere. The moment short covering is over, you'll again start seeing a decline. So right now you just need to shorten your time horizon and maybe look for individual stocks.
Sajeev Dhawan as well joins in. Sajeev, hi, evening. What is your sense? What was actually happening with the market today? We were just all over the place.
Hi, it was a very volatile day. There was talk of maybe some basket trading which came in the morning, or some system error which may have resulted in a very sharp fall which came in a matter of minutes. But as the markets digested the inflation figures and the comments by the RBI governor, I think the market really does expect him to cut rates by 25 basis points next week. As Ashwani mentioned, there was definitely some short covering, and you saw some very sharp movements in a lot of the stocks, whether it's a Reliance, a Larsen, or some of the mid-caps. And we are in this narrow range, but the markets had a chance today to break down below 5,800. It did not happen. And I think towards the close, you would have probably seen positional traders probably go long again ahead of the weekend and over the next few days. And unless the RBI governor disappoints next week, I think the market should probably remain on a firmer footing, considering you've got the FI flows, which continue to be pretty robust and strong.
Okay, yes, the RBI is something which has all of us on our tenterhooks come 19th, and we would be looking for directional cues in terms of market moves as well. But of course, the other thing is what happens to investment, what happens to growth, and that really has been a big question mark ever since the budget as well. Chetan, I just want to get you on that point, because the capex cycle clearly has stalled almost. What steps can the government take to revive growth?
Okay, I think as I mentioned, one is exports and second is the market-driven improvement in capex because of improvement in external demand. But I think from the government side, what it needs to do is to really focus on try and accelerate the approval process for projects which are stuck. And the government has already begun to do that, but it needs to be at it. We can't drop the guard on that front. The enabling policy environment from the government will still have to continue to come through. And that's how we will get the recovery in capex going forward.
Ashwini, we were chatting about the way the market moved, but what about the Bank Nifty? You said it's bottomed out, but what trade and what levels would you now monitor?
Well, it had bottomed out for the day. Now, clearly, it's fluctuating fairly wildly in this 11,500 to about 12,200 range. Again, that's extremely volatile for any kind of directional move to come in. Today's move was basically short covering. When everybody gets short on something, it tends to have these sort of bounce backs. But I won't really try to extrapolate today's action and say it's heading back towards 13,000 or something. I think even on banks, they need to cool down, consolidate, and only then you will get a tradable move, or at least one that will give you a sustained uptrend. This kind of volatility, tomorrow you can be easily down 150 points, and then we'll find a news to attribute that movement to. So I think it's too volatile a market for any kind of directional sense to come in. We need to wait for this volatility to die down. Maybe it will post 19th of March.
Sajeev, how would you approach the banking pack ahead of the policy day on 19th?
I think you'll probably have to be long on the stocks. If you're conservative, then you can go and buy the Bank Nifty options made by the 12,300, 12,500 call. If he does cut rates, there will be probably a further 2 to 3% sentimental reaction. But yes, will the Bank Nifty run away to 13,000 in the short term? Highly unlikely, unless the fund flows continue from the big institutions, and it'll be selective. So you'll still have to stick to the large caps. Mid-cap banks, PSU banks will play catch up, but unless we see the general market consolidate at levels probably above 6,000 and the Bank Nifty stay above 12,000, 12,200, retail investors and speculators who've been preferring this sector might still err on the side of caution. So it's definitely a sector to buy on declines, but the aggressive bets in direct positional trades should probably come on or after the 19th.
Chetan, what about the currency though? Because that clearly seems to be dictating the market move. When do we see the currency turning around? Because that weakness clearly has been impacting everything, even equities.
So firstly, I think we've had to give the confidence to the developed world that yes, growth in India will stabilize and probably begin to gradually recover. And the government's actions have built that confidence, and we are seeing capital inflows being stable, helping the currency to stabilize as well. So I think that factor has already helped currency stabilize. But going forward, a sustainable improvement in currency dynamic will have to be done by reduction in current account deficit, which also will probably happen, but it's going to be quite a slow process. And I think the way it happens is that we have increased fuel prices, so that will work on the oil imports. As CPI inflation goes down, which we think will happen in the next 4 to 5 months, you will begin to see that impacting gold imports as well. So these two factors alone will help the import side. And on the export side, we have, as I mentioned, seen improvement in exports earlier. And going forward, it will probably be helped with the recovery in the US. And therefore, the current account deficit, we think, will go down. It will be at about 6% in December quarter. But after that, it will begin to come down as percentage of GDP. And that's what really will then begin to support currency dynamic.
Sajeev, how would you approach real estate now? Well, the stocks have been rebounding somewhat in bits and starts, but fundamentally, is there anything to that move?
It remains a very high-risk sector. Stocks like DLF have been on an uptrend since the last actual few months. It's around 200. Obviously, around 280 now. You have further bullish reports of the stock hitting 300 to 320, but I think a lot of the positive news flow has already been factored in. It's a sector where a lot of investors and traders have lost money consistently over the last few years. So if you want a high-risk stock, then Anantraj is the one where we've seen some quite aggressive buying. But that's the sort of stock which can move up or down 10 to 20% in a matter of days and correct an equal amount. So that's for the high-risk. Safer stocks in the real estate would probably be a Godrej or a Godrej Properties or an Oberoi Realty. But it is definitely a sector which probably investors should avoid, and probably suits traders who are quite nimble with their stop losses in place.
Ashwini, do you like anything out of the real estate basket?
I don't think these are, long-term moves, and particularly on mid-cap real estate. Yes, DLF, etc., you can trade a 10-15% type of move, but I find it very difficult given the falls from the pledge shares that we've had. You could probably get into a Sobha, Godrej Properties or a DLF, but I think there are way better sectors which are, having much better quality of corporate governance, clean balance sheets. I don't think these sort of stocks, you can really analyze them on a fundamental or technical basis, because when blocks of stocks come in for selling, nothing works against them.
It's that time of the show when we tell you what trades to execute come tomorrow morning. Gargi, you go first, and the first stock on your radar.
Well, that's JSW Steel, Aisha. If you look at the counter's performance over the last 1 month, pretty dismal. In fact, 12% decline that it's posted in the last 1 month itself. It's come off, almost 100 rupees from Feb 20th, and it was trading at about 809 rupees that day. It's come to 708 rupees, so about 100 rupee decline. And if you look at fundamentals over the last 3 months, nothing really has changed for JSW Steel. There is only nervousness building on most of the metal stocks, JSW in particular, mainly because the Karnataka iron ore mining ban still continues. But remember that going forward, any positive trigger in terms of production of steel, also any trigger coming in terms of opening up of iron ore mines will be a positive. Keep an eye out for JSW Steel. A high beta counter could show a probable 3 to 4% move in the next week itself.
Ashwini, what about your stock ideas?
Well, the positive bias on rate sensitives will continue. So LIC Housing is a buy with a stop about 239, target of 252. Canara Bank is a buy with a stop about 429, target of 448. And PFC is a buy with a stop about 192, target of 205.
Sajeev, anything that you like which could be a good buy from a medium to long-term time frame?
Well, we're more or less following the trends at the moment. Most of the stocks that we've liked in the past have hit their price targets in the recent rally. And Accumulate, we do have, again, on Tata Steel after its recent correction. We feel that would give you decent returns if you can accumulate that between 340 and 360 as an investor. From a trading perspective, stocks like Reliance, Larsen, Cipla, we have long positions in. But these would be trading calls, and we would look to maybe get out of those if they moved up a few percentage points. The point is, on valuation front, we're not convinced that the markets are that cheap. It's only individual stocks or sectors which have corrected quite sharply, which we like, and at the moment it's frankly metals, which at the moment doesn't have the rest of the market backing it at the moment.
Shesat, in the past you've done some work on asset quality of Indian banks. What are your thoughts on that?
Well, I think the asset quality issues still persist, and the challenge for the banking sector, particularly on the SME side, is that when you have GDP growth which has been at a very high level of 8.5–9% for a long period, and then you have a slow growth environment, that tends to have an impact on the asset quality. So the fact that the growth, even if it recovers to 6%, will still be relatively low compared to what we were having in the past. Asset quality challenge will still persist with us for a while until we see growth rates coming back to around 7% levels.
Gargi, what about the second stock on your list?
Well, the other one is Karnataka Bank, and the rally that we saw in most of the banks today, at least in the second half of the trading session, probably giving an indication to dealers that Karnataka Bank may be a good buy going forward, expecting some HNI accumulation to continue for that counter. At lower levels also we had seen some accumulation coming in for Karnataka Bank. Today it closed up almost 4%, and they're expecting at least a 3 to 4% move coming in by end of next week.
Ashwini, before we wrap up, your Nifty trade for tomorrow morning.
Well, I've taken profits on index positions today by the close. I would think some kind of intermediate bottom was formed today. So if you get any kind of a dip, and if you must trade, then maybe on a dip towards 58.60, 58.70, you would try to buy it. But I won't buy at the open or if the market opens flat. Only on a dip or a 40-50 point dip would you try to get into the Nifty.